Hello and welcome to Real Talk. Thank you for joining me. Well, I thought we'd start with the National Australia Bank figures that have been released on their survey of property growth Australia-wide. 5.1% medium growth right across Australia. Interestingly enough, if you segment it, the Sydney market is currently at 19% growth year to date. Can you believe that? For those of you who might remember, we closed the Sydney market last year at 11.6%. After a soaring high, the last quarter saw the market settle at 11.6%, which was only 0.01% under Melbourne. So interestingly enough, last year, everyone thought the Sydney market was had the strongest growth, but at the end of the day, it all levelled out to be almost neck to neck between Melbourne and Sydney. We are sitting in Melbourne here at the moment, according to National Australia Bank, at 12% growth year to date. So much for the crash that everyone, all those doom and gloom people have been predicting for the last couple of years. It's nowhere near in sight at the current time. There's a lot of talk in the market about the first homeowners that are now, they have more surplus income. In the last 10 years, the surplus income for this sector has really hit an all-time high, which has given them the option to rent where they want to live, which is often in a city, you know, work-life balance, live near where you work, near where you recreate. And of course, that's where it's quite expensive to buy. So they're opting to rent there now. And instead they're investing in areas they can afford, obviously a little bit further out. I think you'll see a lot of discussion around that because that creates another social issue about, you know, when do people buy their own first home? Well, I think we'll close on the property market now and start talking about the share market. Given the social unrest internationally in the last 10 days, you won't believe it, the markets have never been so strong. It's ironic, isn't it? But the UK market last week was up 9%. Well, it's continued to grow. This week it's now up 11% since the drop for Brexit. So not only is it fully recovered, it's actually overtaken. And I think there's a lot of real interest in the UK property market, with the Asian market being turned away from the Australian investor market by, you know, as we know, they had a 3% tax on top of stamp duty, then it went to 7%. So I think with the fiscal policy tightening around banks loaning to foreign investors, they still want to put their money somewhere. They still want to invest. So they've turned their sights now on London, which is exactly what they did after the GFC. When London prices dropped during the GFC, when they recovered, they bounced up plus 11%. I wouldn't be surprised, with all the analysts worldwide saying that the UK is in for a very tough financial time in this next 2 years and the Brexit. Don't be surprised if the property market isn't trumped and blows everybody out of the water with this, I guess, this lack of expectation. And we've certainly seen it here in Australia, what the Asian market can do when they come investing here. They can really drive property prices. So. But I think all round the markets are very strong. The bond market in Australia is riding at 2%, which is the highest internationally. And for those of you who aren't that familiar with the bond market's really the government's guarantee to repay monies through their issuing of bonds. So it's a way of getting some investor money in. And the bond market here is so high, which is an international signal that people have a lot of confidence in the Australian government, which is very nice to hear. And I think that we will see another drop. I think the RBA will come out with a drop. Interestingly enough, you all hear me talk about the correlation of the interest rates to unemployment or employment. I think now that we're getting unemployment is dropping, I think focus has really turned now to getting inflation on the move, because when you've got deflation, which is what we have here in Australia at the moment, it's not good. Natural growth of 3% is actually a flourishing economy. It's a nice even ebb and flow. So I think the pressure's on the government now to get some inflation back into the hop, step and jump in the community. So I think that's where they'll turn their sights next. But overall, I think it's good news week. The markets are up, property's up. The clearance rate was 74% last weekend. And only about 468 properties went to market, so it's very strong. So, and we're certainly seeing a lot of investor confidence here. We've got a lot of clients looking to buy their third investment property who've been in the program for 3 and 4 and 5 years. And, you know, that's the most important thing. It's every Australian's responsibility to look after their retirement. If inflation is growing at 3%, you need to be investing your money so it's going to grow at least 10%. Minus 3% of inflation, you get a real return of 7 at least. And that's what we all need to look out for. Ourselves, our future, and certainly our children are going to need our help with property if our market continues to track the way it is. All right, I'll sign off here. Thank you for listening. See you next week.